If you observe Indian government spending over the last few years, one sector that has been the prime focus, that is infrastructure. Indian government has done huge capex across infrastructure sector that include power transmission, clean energy, railway, defense, water, data center and green energy sector with focus on Make in India and Atmanirbhar Bharat. Government also introduced PLI scheme to fuel the growth in manufacturing sector. All these investments have set a very solid foundation not just for next few years of growth, but it has created a decadal growth opportunity for the entire capital goods sector of India. Hey everyone, my name is Sahil and this is my Personal Finance Academy. I recently got a chance to read a detailed report by Motilal Oswal on Indian capital goods sector and the decadal growth opportunity in the space across the sectors. This report outlined the government capex as one of the biggest growth driver for the sector. And we have also witnessed the focus of Indian government to improve the infrastructure of our country. If the current government comes back to power, it will significantly push the initiative it has started in the last couple of years, and that would further fuel the growth across the capex theme. This report further identified the key players to benefit across these 7 sectors, including power transmission, railway, defense, water, PLI-led capex, data center and green energy sector. So in this video, I would highlight growth plan for each sector within the capex theme and top companies in the space that you can track closely. But before we begin, please note that many companies in this capex theme have already rallied a lot and have already discounted the near-term growth in their valuation. Having said this, it's a decadal opportunity. So there will be selective opportunities that are worth keeping a close eye. Alright, let's get started. Indian government has massive plans to generate power from renewable sources. The goal is to increase power production capacity from renewable sources from current capacity of 166 gigawatt to 537 gigawatt by FY30. That itself shows how massive the growth potential is. To achieve these goals, a transmission line has to be established before renewable energy capacity gets commissioned. And that's where government has planned to set up transmission line worth rupees 2.4 lakh crore. So as per Motilal Oswal report, the key players in this segment include Power Grid, then L&T, KEC, Kalpataru, Tata Projects, GE T&D, then Hitachi Energy, ABB India, Siemens, CG Power, Voltamp, Transformer and Rectifier, that is TRIL, and Bharat Bijli. Friends, I have also created an Excel sheet to track these companies. I'll discuss it towards the end. Also, please let me know if you are holding any of these companies in your portfolio across the theme to play the capex cycle in India. Alright, let's have a look at the next theme. As we are all aware, there is a significant capex in railway theme across modernization of railway infrastructure, including innovative wagon designs, ramping up of locomotive demand, awarding more contract for manufacturing high-end passenger trains such as Vande Bharat, then inviting private sector participation in wagon manufacturing and expanding the nationwide metro network in the country. In addition to this, there is a planned installation of Kavach alongside the entire railway network of nearly 68,500 km route. So as per National Rail Plan, investment of 16.9 lakh crore is needed to ramp up high-speed railway network and increase coaches and locomotive capacity. Top player to benefit from this railway capex include L&T, then KEC, Kalpataru, Siemens, ABB India, CG Power, then TD Power, Hitachi Energy, RVNL, then Titagarh Wagon and Jupiter Wagon. By the way, I have also identified some of the top stocks from capex theme to invest my own money, and details I have shared in my weekly series that include one exclusive video on key macro events of the company, then top sectors and stocks to benefit from it, along with a close eye on quarter result of more than 200 companies that I track in an Excel sheet. This series also includes stocks where I am keeping my conviction and investing my own money. Again, this is not a buy or sell call, but an attempt to create a close community of long-term fundamental investor. You can get the detail on my website or via the join button. If there is one sector where government is extremely focused on indigenization, then it is defense. Historically, India has been highly dependent on countries like US for import of defense items, and now they want to reduce this dependency by promoting domestic manufacture. There is already a ban on import of hundreds of defense items. In FY24, government has allocated a budget of 1.6 lakh crore. This chart shows the consistent rise in government budget for defense. Overall, it has created an opportunity worth 5 lakh crores over the next 5 years. Some of the top beneficiaries from this theme include Bharat Electronics, Hindustan Aeronautics, Bharat Dynamics, L&T, Mazgan Dock, MTAR, Data Pattern, BEML and Bharat Forge. There are still millions of people in rural part of India who don't get clean drinking water and do not have access to proper sanitation. That's where Indian government has launched Jal Jeevan Mission with objective to provide clean water in every household, school, Anganwadi and healthcare center of India. And it requires a huge infrastructure right from cleaning the polluted water of rivers to supplying that water to every part of the country. Government had planned a capex of 3.6 lakh crore for this mission over a period of 5 years. Out of this, around 1.4 lakh crore has been spent between FY20 to 23 and remaining amount is expected to be spent over the next few years. Now, some of the key beneficiaries of this capex theme include L&T, KEC, Kalpatru, then KNR, PNC, then your WATEC and your NCC. Friends, I have recently done a detailed video on water recycling sector of India. To boost the manufacturing sector of India, Indian government launched PLI scheme across sectors including mobile phone, advanced chemistry cell batteries, electronics, auto components, pharma, telecom, textile, then white goods, solar module and so on. Government outlined incentive worth 2 lakh crore under the PLI scheme. This is likely to result in capex of 4 to 5 lakh crore over the next 5 years across sector. This slide shows the breakup of PLI scheme across sector. Highest allocation is for auto and components, followed with mobile phone, then solar module and so on. Just to give you an idea of impact of PLI scheme in FY23, PLI-led capex attracted around 51,200 crore of investment across your mobile, then solar and pharma sector. Although the other sectors such as automotive, advanced chemistry cells, specialty steel are yet to make meaningful investment that form nearly 60% of total targeted PLI capex. As per Motilal Oswal research report, the top beneficiary of this PLI capex include ABB India, Siemens, L&T, then KEC, Kalpatru, Dixon, Amber, PG Electroplast and Thermax. The fast adoption of technology and digitization, massive growth of internet usage and rise of technologies like artificial intelligence, IoT, big data has resulted in humongous amount of data generation. And this data generation is only going to explode with new technologies like 5G. Now this data has to be stored somewhere and Indian government wants this data to be stored within India. And that's where there is a huge potential in data centers with hyperscalers that stores and processes the data. Now as per CRISIL report, India's current data center capacity stands at around 890 megawatt and is expected to reach around 1700 to 1800 megawatt by FY25. The value of the Indian data center market is expected to increase from $4.35 billion in 2021 to $10 billion by 2025 at a CAGR of 15% over FY22 to 25. Some of the biggest growth drivers include government initiatives such as keeping 75% of data within the nation, then infrastructure status to data centers, then SEZ classification for cloud data center in addition to free land, water and power. Now this has resulted in increased announcement from players to set up data center capacity in India. Friends, I know that this video can't do justice to each theme as they all need a detailed analysis. But this video is to give you a high-level understanding of the Decadal CAPEX theme. Let me know if you want me to discuss any of these themes in detail. Now, data center would again require a big infrastructure around high computing devices, uninterrupted power supply, HVAC, that is heating, ventilation and air conditioning, then security system, building the automation system, switch gear, wires and cables. So there's a huge value chain around data center itself. Also, data centers would be a huge driver for green power generation. So as per report, the top player to benefit from data center theme include your Cummins India, ABB India, then Siemens, Hitachi Energy, Schneider, then L&T, KEC, Kalpatru, Amber, Blue Star and Voltas. As per Grant Thornton Bharat FICCI report, there are 20 lakh electric vehicles expected to come on road by FY26 and there would be a need for 4 lakh EV charging stations in India. Now this would be done by a mix of private and public investment. Indian oil marketing companies have announced setting up of nearly 22,000 electric vehicle charging stations and private players like Tata Power would play a key role in setting up EV charging stations. EV chargers would also require installation of transformers, then substation equipment and safety equipment. Private players like ABB and Siemens would also be able to target the opportunity from the upcoming EV charging infrastructure. However, the Indian EV charging market is still at nascent stage as compared to the global markets. As discussed before, Indian government has massive plan to generate power from renewable sources. The goal is to increase power production capacity from renewable sources to 537 gigawatt by FY30 from current capacity of 166 gigawatt. This would involve renewable energy capacity addition across solar, wind and hydrogen, then grid investment, battery charging infrastructure, smart metering, ethanol blending and so on. As per CRISIL estimates, India spent around 5.7 lakh crore rupees on green investment in the industrial and infrastructure category. This amount is estimated to grow 4 times by FY30 in order to comply with COP27 target. There is already a significant investment towards green energy technology, including green hydrogen, that would start yielding result in the next 3 to 5 years. As per report, the top beneficiary of this theme would include Tata Power, NTPC, Power Grid, ABB, Siemens, Hitachi Energy, Genus Power, Praj Industry, Cummins and Thermex. In addition, there are many EPC companies across your solar, wind and data center segment that would benefit from this capex. Having said this, there are some key risks that can negatively impact the growth thesis. Let's have a look. So first key risk is slowdown in order inflow. A major chunk of the infra capex is done by government and so far there's a strong order inflow. But there's always a risk of slowdown in order due to political issues like general election outcome or let's say change in government priorities or geopolitical issues. Second risk is raw material risk. Raw material is a key cost for the companies in the capital goods sector and correction in raw material prices have supported margin for most of the company. However, any adverse movement in raw material price can hit gross margins of the company. Then third risk is valuation risk. In my opinion, the biggest risk as of today is valuation risk. As every market participant is aware of the opportunity in the capex theme, there's already a euphoria in the space that has resulted in steep valuation for majority of capex related companies. So on one side, while the growth potential is immense, we need to be careful in picking right stocks where valuations are not exorbitantly high. Otherwise, once the majority of capex theme would play out in the next few years and the growth would slow down, majority of companies won't be able to sustain high valuation that could result in sharp correction. The question is, if the valuations are rich, then how do you identify investment opportunity? For that, you need to keep a close eye on quarterly results and management guidance for near future. One of the key metrics that gives a good idea of future potential is order book. You can easily gauge the future prospect of any company based on the order book, and that detail you can gauge from the con calls. Moreover, please note that you can't generalize all the companies based on PE ratio. A company might command a PE of 100, but it might be sitting on a huge order book worth say 10 or 20 times its revenue and showing very strong growth on quarterly basis. So you need to look at earning growth potential of each company and compare its valuation to gauge whether it is worth investing the money or not. Here please note that there are two kinds of companies. One is product companies that manufacture the product that are required for the capex, and second is the EPC companies, that is engineering, procurement and construction, that are involved in setting up of the infrastructure. For example, in solar capex, a product company would include manufacturer of solar panels, and EPC companies include one that set up the solar panel. Some of the top product companies in this capex theme include ABB India, Siemens, Cummins and Hitachi. These product companies would always command a higher valuation as compared to EPC companies. Now, if you observe carefully, there are some common companies that are going to be a beneficiary of this capex theme across domain. It includes L&T, ABB India, CG Power, Cummins India, Hitachi, KEC, Kalpataru, Siemens and Thermex. I have also created an Excel sheet that includes all these companies across themes. Let's have a look. So this is the Excel sheet that I've created to track all the companies within the Decadal CAPEX opportunity in India. And you can see the name, sector, market cap, current price, PE ratio, 52-week high, low and closing price. And you can sort it down by market cap, PE ratio and all of that. So if you just sort it down, you can see L&T has got presence in almost every CAPEX theme of India. Then you have got Siemens that has presence in multiple themes. ABB India has got presence in a lot of these themes. Then you have got Hitachi, then you have got Kalpataru, KEC that have got multiple themes. And you can also sort it down by various themes. For example, if you just want to know data center related companies, this is the list. And likewise, if you just want to know green energy, then you can filter it out. And apart from this, if you just want to know the valuation, you can see here, for instance, let me just sort it down by theme. For example, if you look at it Within data center, you've got all these companies, and look at the PE ratio. So the point is that majority of these companies are trading at very high valuation. But again, like I said, you also have to look at the earning growth, because at the end of the day, valuations would be decided on the basis of the earning growth. If the company is growing at a fast rate, has got a bright future, it will command a premium. And then you can look at the market cap as well. So let's say if you want to know companies with lowest market cap, for example, in that case Bharat Bijli is there, that has got presence in power transmission, and the valuations are also looking at just PE of 17. Again, you got to look at it whether they are fair or not. Then you've got Vatek as well. Then you've got KNR, and so all these companies have got market cap of below 10,000. That also include TRIL, Voltam, and apart from that, majority of companies are into your mid cap to large cap category. In addition to this, if you just sort it down, you can also look at the change in their valuation. So for example, if you just sort it down, today BDL has jumped 6.3%, Data Pattern has jumped 6.7%, Dixon has jumped 5%, GETND has jumped 5%. So this is a good way to track all these companies, and of course you got to keep a close eye on their quarter result and then take a call whether they're worth investing your money or not. By the way, you can access this Excel sheet for free. This is part of my 300 plus top super stocks of India. You just need to visit my website and click over this courses, and there's this free live tracker. It also include your more than 300 plus super stocks that I'm tracking across themes like China and Make in India. Then you've got consumption theme, then you've got digitization, EV, finance and investment, and of course you've got multiple sectors and stock within that. Next to that, you've got this Decadal CAPEX theme that you can access for free. So in this video, we discussed the Decadal CAPEX opportunity in India across 7 key themes. It includes transmission, railway, defense, water, PLI-led CAPEX, data center, green energy, and we also discussed the top players in this space. Friends, if you are confused about what to pick, you also have an option to take the mutual fund route to play these themes. Currently, there are 3 good mutual funds. One is a dedicated energy sector mutual fund, which is SBI Energy Opportunity Fund. This fund was recently launched and already command an AUM of around 7,500 crore. Currently, there are 24 stocks in the list across large, mid and small cap with around 60% exposure in large caps. Next, 2 mutual funds are actually mix of power and infra theme. You have got Nippon India Power and Infra Fund with AUM of around 4,500 crore and currently hold around 40 stocks across large, mid and small cap. And third is Tata Resource and Energy Fund that has an AUM of around 500 crore and hold around 38 stocks across power and infra sector. So this is it for this video. If you find it useful, do share this video within your circle. Also let me know which companies from this list you hold in your portfolio and which themes or company you want me to discuss in detail. I'll see you next video. Till then, take care.